This is Danny Gould with the Gould team selling Silicon Valley. Welcome to another Silicon Valley market snapshot. This for the fourth week here in June of 2019. We're already halfway through, folks. We're halfway through the year, and I wanted to break from the normal heat maps that we're accustomed to seeing in these videos. And if you've been watching my videos for any given period of time, you'll know that occasionally I use what we call trend graphics here, which is a data company that basically pulls data straight from the MLS and gives it back to us in a way that we can interpret and read. So really fascinating stuff. What I wanted to do was, instead of look at specific areas or specific communities, I wanted to take an amalgamation of everything that's going on in the market as a whole. And what I did was actually pull data for all MLS listings regions, which include Santa Clara County and San Mateo County and parts of Alameda County. And I brought all that data into one singular trend graphics report. And so what we're going to be talking about here is maybe not readily applicable to you, because keep in mind, right, when you look at something when you look at a data set that's so large, the micro, right, which is your community, may not necessarily fall in line with what's going on a macro level, especially if you're in the top quartile or bottom quartile of your particular market, right? So if you're in the middle 50%, you're more likely to fall within these numbers. But again, whatever happens at the highest end of every region and the lowest end of every region doesn't necessarily fit with what's going on at a macro level. But keep that in mind. So definitely. The other thing that I wanted to chat about before we're going deep into the data is that it's fascinating, because when you look at this and you start to see what's going on, everything is stabilizing. Everything that I've been talking about over the last 6 months, how we're coming into a stable market, how we're neutralizing, normalizing, whatever you want to use, whatever synonym you want to use. The reality is that we're still in a seller's market. It's not rocket science, right? And everything that we're going to look at right here supports that. We were teetering on the edge of a buyer's market, or rather a true neutral market, not really a buyer's market. But don't believe what your expert friend or expert colleague at your office says. If we're looking from a macro level, it's still a strong seller's market. And I don't know, I am unaware of any area, any region, any micro community in the Bay Area that is actually considered a buyer's market from an inventory perspective, from a pending levels perspective, from an absorption rate perspective. There's so many ways to analyze the market, and every statistic says the same thing, that despite what the media might have you believe, it is still a seller's market, not nearly as strong as it was before. But rest assured, ladies and gentlemen, we're leagues away from where we would actually be in a buyer's market. And so everything that I'm going to talk about today will show you exactly why that is the case. So without further ado, let's dive in to the trend graphics report here. And just to explain it to you, this is all MLS listings areas combined. That means Santa Clara County, San Mateo County, parts of Alameda. Property types, all residential. So we're talking condos, townhomes, single families, attached homes, duet homes, whatever you want to call them. And then special shout out to my broker, Robert Cruz, who helps put all this data together for us. The man, the myth, legend. Thank you so much, Robert, for your support. So we're going to look, first of all, at the number of homes for sale here in the MLS listings region, which is 4848. So that's the total number of units available right now. Now, when you compare that to May of 2018, which was 3347, you can see there's quite the leap, right? And so actually, when you look at that, it's 44.8% higher. That's staggering, right? Now, keep in mind, and we've talked about this before in Santa Clara County, but this holds true in every county, San Mateo and Alameda as well, is that the inventory levels last year were suppressed, right? So it's not really a matter of, well, how far or how much above last year were we, because that's not really the best measure, right? But it's all these other metrics combined, right? So that tells us one part of the story. We can see here that in terms of properties under contract, right, there is 3.4% lower pendings this time than there was, or right now than there was this time last year, right? So 2729 total pendings, right? And then 2976. So you can't really see that. 2976, 2729. Guys, that's pretty good, you know? So that is definitely a decrease, right? But it's not so much of a decrease that that it's overly affecting the market, right? So let's come over here to average days on market. This is a fascinating one. So when we look at the average days on market here, this is the trend line, right? And I'm gonna move this a little bit so that I can get on in here. Last year in March, we had 108 average list to sales price ratio, right? Or sales price to list price ratio. And today, when we look at that, we're right at 100%. I mean, that's fascinating. Think about all the data think about all the data points that this has to pull from. And literally, if you price a home somewhere, that's what you sell it for. And it's so funny because I have told my sellers, I've preached this for like the last 6 months. I say, price it where you want it to sell. Because really, you know, this is not the market where you're going to drive the home up through multiple offers, right? And so my advice to most sellers, and again, you know, there's macro advice, there's micro advice, there might be different situations in which a different strategy is called for, but on the whole, you know, pricing it right where you want it to be within reason, right? Like I want my house to sell for $5 million, but if it's only worth $1 million, then, you know, obviously but within reason, right? Pricing it where you want it to be and where you think the market is really the best strategy in this market, right? And with the full expectation though, that it's not gonna take just a week to sell, right? Because And actually, this should be very telling, right? The average days on market in March of 2018, which was a hot market where there were a lot of properties selling in 7 days or less, the average days was still 21. That is not too far off where we're at today, which is 27, right? So again, I want to caution everyone, you know, don't feed in necessarily to this idea that, you know, the market's collapsing. The data shows we're really not that far off where we were this time last year, or we were last year. Okay, so let's go back though. May of 2018, 18 days to 27 days. Okay, that's 9 days more. That's a week and a half, right? That is not super long, like that is not a super big increase. Now, let's look at what happened here, right? Because if we look at the trends, right, we see that in the winter, the days on market increased drastically, right? And with it, days on market dropped. List to sales price to list price dropped. Now, this is a direct result of the market adjusting, right? And so whenever there's an adjustment period, right, people's strategies don't necessarily fall in line with what the market bears at the time, right? And so things start to go south, right? So people price their properties here where they think the market is, but the market's really here. And so as a result, things take longer to sell, price reductions happen, etc., right? And so this is where all that happened, right? But as we're seeing, days on market is starting to go down. Sales price to list price ratio is starting to go up because people are adjusting their strategies, and that's allowing homes to sell at a quicker rate for more money, well, comparatively more money to where they're listed at. Now, that doesn't necessarily mean that they're getting more for their property than they were in January. prices may have dropped in those areas, but people are readjusting their expectations, and as a result, pricing properties better, and also that's contributing to them selling quicker as well. So that's a good thing, right? That's a good thing, because being realistic is like, it's healthy, right? It's definitely very healthy. But a couple other things here that are really fascinating that I wanted to point out. Not that here, but down here. Right? So back in May of 2018, we had 1.1 months of inventory based on closed sales. Now, if you notice, in a seller's market, that means there's less than 3 months of inventory. Neutral market is 3 to 6 months of inventory, right? Now, at the peak, we were at 2.6 months of closed inventory, right? So, at its worst, within the last 15 months, we've approached, in terms of inventory levels, neutral market status. But we weren't there. We weren't even close. All these people saying that we're in a buyer's market now and everything, they're not using buyer's market in the correct sense. Now, it's definitely true. The market has shifted more into buyer's favor, right? It's shifting into, or getting closer to, buyer's market, right? But we're not nearly even close to being there, right? And so that sentiment that's been shared by the media, that we are, that prices are falling and everything, is some of it is actually true, right? And we're going to actually dissect that in a minute. But look at this. We're at 1.8 months of closed inventory, or months of inventory based on closed sales. That's a very healthy number, right? Now, definitely not as good if you're a seller as it is here, right? But again, last year we talked about this. Inventory levels were suppressed, right? This is more in line with what we're accustomed to seeing in the Silicon Valley. So things are normalizing again, right? Now, last couple things I wanted to share with you. Absorption rate, as you know, I'm a big geek when it comes to absorption rate. I think this is honestly the best metric for the health of the overall market. And what it really does is it measures buyer appetite in the market at any given point in time. And when you look at this data, right, when you look at this, and remember, a buyer's market is a 16% absorption rate or below, and a seller's market is 33.33 and above. And look at this graph and tell me when we've been in a neutral market or a buyer's market, and that's 0, right? Now we've gotten close, but again, we're readjusting and coming back up, right? We're still in a seller's market. And that's the punchline for today, is that despite the craziness, despite all the stuff that's been going on, the truth is that we are still in a seller's market, right? And with that knowledge, sellers should be prepared, right, to go in and stick to their guns, right? If you're a seller, don't give in to this like, oh, after 14 days we have to drop our price. That is what a weak agent will tell you to do. But if they have the facts, they'll know that it takes 4 weeks for a home to sell. So why are you dropping your price after 2 weeks? I'm seeing that a lot right now, by the way. And there are cases in which it's warranted because it's overpriced to begin with. But if you're pricing it in line with where the market's at, and you're only waiting 2 weeks before you're dropping the price, it's a bad strategy. It's a bad strategy, and you just gave your money away. But that wouldn't happen if you were with me. So again, I'm just gonna come over here and I'm not talking to any of you, by the way, because none of you would do such a thing, but I'm just in general, right? I wanted to point something else out too. This Mercury News article, lovely article that came out. Snap, record upward climb of Bay Area home prices broken. Declines in tech-heavy suburbs lead to flat median sales prices. median sales price by Lewis Hansen, April 29th of 2019. Guys, let me show you when the median housing prices dropped. Okay? Okay. Bear with me 1 second. I need a green screen. Median housing prices started dropping in May of last year, okay? And they've been on this kind of like roller coaster ride. We reached this kind of like valley here in January of 2019, but we're on the rise. And of course, the data that they're using there in the Mercury News is different than the data that we're using here. They're actually measuring all 9 counties across the Bay Area. So that's even more data, right? But the truth is that the data was from March, and they're not reporting it until April 29th, right? And so that's a huge, I mean, that's 4 to 5 weeks behind. And so what I would invite you to do is when you look at those media articles, make sure that they're not dated, right? Because this data right here is up to the minute data, right? This is literally the freshest stuff that we have. And so I would invite you that if you have any friends or family members or neighbors or coworkers or anyone who is interested in real estate, is thinking about making a real estate decision or anything, share this video with them, because and share my YouTube channel with them so that they can stay up to date every single week. Because really, you know, the truth is that what you're getting right here is the freshest stuff available, and we're able to communicate, we're able to open up a dialogue and a conversation a lot sooner with more relevant information than if we were to, you know, just rely on the Mercury News. And not knocking them, but it takes time for them to really, you know, do what they need to do with that data in order to put out a captivating story. But this is it, folks. This is the market, and that's the market in a nutshell for the first half of 2019. We started off, people were in a panic. Everything looked like it was going to come crashing down. We flirted with being in a neutral market. We never quite did. And now we've stabilized to the point where things, unless something drastic happens, like a flood of new inventory comes on or everyone loses their jobs or something, this is the market we're going to be in, right? We're gonna hover around that, you know, 97 to 100% list to sales price ratio. We're going to hover around that 30-day mark for average days on market for a home to sell, and that's what we're going to be. You know, we're going to hover around that, you know, 4,500 to like 5,500 total units for sale, and you know, it might fluctuate, and we're going to hover around that, you know, 2,500 to 3,000 pendings at any given time. That's just the market that we're going to be in for the remainder of in my opinion, probably the year, right? And certain things may impact that, right? Things that are out of our control. But that's not what we're here to talk about, right? We're here to talk about what the foreseeable future may be, given that nothing out of you know, the Silicon Valley's control happens, right? That red button gets pressed, you know, all this is a moot point. But I guess the bottom line is here that I think a couple weeks ago, you know, I posted a video that that maybe was a little bit derogatory, you know, and a little bit pessimistic on what was going to happen, you know, over the next 6 months. And it's not that pessimism has subsided. I'm not but I think one thing to keep in mind is that definitely, you know, the seasonality of the market in this kind of neutral environment matters even more. And so that pessimism is not necessarily directed towards the market in general. For me, my belief is that if you're going to sell your home and you have flexibility in the time frame in which you sell it, use the seasonality of the markets here in Silicon Valley to really help you. And every single area, every single microclimate actually has and behaves in a different way. Case in point, I just went on a listing appointment this last week, and I noticed that the summertime was actually better in that zip code to sell than the fall. And this was news to me because when you look at the macro, the fall is actually a better time to sell than the summer. But for whatever reason, this specific neighborhood you had a better chance of selling your home for more money if you listed it in the summer. And so with that data, you take that data to the client and they're sitting there and they're like, okay, well, this makes sense. Right? And so use the data, use everything that we're doing here to make the best decision possible for you, because really what we're talking about here is the macro, and what we're able to do on a one-on-one basis is the micro, and really figure out exactly how to maximize the return for you and ultimately get you what you're looking for, which is the highest possible price. So if you're a seller. Now, if you're a buyer, this is also great information, right? Because you're able to go in there and we can do the same thing with you too, right? There's obviously two ways to play this game. You're either a buyer or you're a seller, or you're both, right? And so this data can help you win in situations where you might not be used to winning, right? As a buyer, simply because you have the data and the information relevant to you to make the best offer possible. So anyways, guys, this is Danny Gould with the Gould team selling Silicon Valley. Thank you so much for watching. Leave your comments and questions down below, and we'll catch you all in the next video.